Hey traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 27th of January until the 1st of February. As always, first of all, thank you very much for your time watching this video. I hope my ideas help you during the trading week. Quick reminder, on Monday I will be publishing the PDF format for this weekly forecast. So just come back to the video, go to the description or the comments below, and you would find a link with the PDF to this forecast. I just want to remind you that the PDF is not a replacement to the video, because in the video I can explain everything detailed. The PDF is a summary of the things. I would like also to invite you to our totally free Telegram channel, and to do that, just click in the description below and there is a link, free link for our Telegram, where you can find trading ideas, setups, educational articles, videos, and many more great things, totally free. If you are new to the channel, welcome to our community, and I hope you enjoyed it and you find it useful. On below you can click the subscribe. Just remember to allow the ring bell so you get notifications when I upload a new material for you. So let's begin. As always, we go through the weekly summary of the previous week review. We check what works for us, what not, what invalidates, and what has to be updated. So the first one we had in our mind was the dollar Canadian. We wanted to see that rallying, clearing this stop loss area, and start looking for the sell setups from this wonderful zone, right? So we cleaned the stop losses, and right here we were looking for the bearish evidences. In that place they came simply perfectly, because we got a correction in ABCD structure, which, let me change the color, it's a bit, maybe this, well, I hope it's a bit better. We got ABCD pattern correction, which is a classical corrective structure, and each of the A, B, and CD was broken into a pattern by itself. Each of these legs basically was followed with a bearish divergence. It was a small one right here and a small one right here, right? And the main part, which I love the most, we got fake highs. You see here an attempt to get a breakout. It was fake. You can see the market has spikes here, and basically gives us a great understanding that the bulls are weak. It's also holding the 200 moving averages, which is a very strong resistance. From that moment, look what we got. Oopsie, sorry for the bad drawing. We got a trend line breakout, and basically from this moment we start to create lower lows. So at the end of a fake rally, we start to get lower lows. Beautiful structure with all the following. After fake breakouts, we got a continuation. So our plan so far works perfectly. The biggest question is what's coming next. Now I do want to show you here this. I want to show you here the scanner I'm using for swing direction, you can see dollar Canadian. Where is dollar Canadian? Here. The 4-hour chart is bearish. Weekly chart already shows the swing high. Daily chart will very likely at the beginning of the week turn bearish as well, because we are exposed now to these swing points forming. So basically my personal view is we are heading lower. How much lower? We have several important levels to pay attention to. Now it's assuming this is making the corrective cycle downwards. We should be heading towards the area of this zone. There are several stop losses levels that we have here. These levels are the last lows of the previous trend, and many traders, especially the new traders, use to locate their stop losses of the early entries right in such levels. And normally, not always, but normally, the experienced traders know that, and after the zones are cleaned, start looking for possible future retraces and buys. So these levels I expect, unless there will be some surprise in the market, to be reached. So So from my point of view, we are heading towards this area. Pay attention, there is a 200 moving average of the daily chart as well. Now, very important note, during this uptrend, see on these deviations, right, that the market has reached. So there is a good chance such deviation, which means cross below, right, would be achieved here as well. This is also 61.8 level of the cycle, classical zone of combination, the area of 131, 130, which is also psychological zone. It looks good, so for me, it's sell and sell the rallies, right? If you are already riding, assuming you're already riding that, enjoy your profits. As simple as that. The next one we had in our list was the pound versus the dollar. We were expecting a corrective cycle on the daily chart, so we wanted to buy retraces. And we got here a beautiful retrace. That was our place, right? Retrace down almost to the middle of the Bollinger Bands, and boom, straight continuation. Now note how powerfully the cross above the 200 moving average is. There is no sign against us. The only thing we do need to pay attention to is, first of all, this clearance zone is reached. That's the next two. Second one, this belongs to the weekly. So that's a very, very, very powerful, as you can see here, stop loss zone. A lot of early sellers would locate their stop losses above the recent protective areas. So I see that 132 and higher reached and clean. There is nothing currently on the way. We do not have any false breaks and lower lows, so the trend is yet to continue. But I do expect it to start and slow down, which means be ready to see some fights here. Okay, every new high to be reached would be very likely try to be countered right away, pretty much straight and immediately, due to the important levels and due to the fact that a lot of stop losses are located there. So once the big guys are catching the stop losses, you would see them cashing out, and boom, reactions down, down, down. So I would expect a lot of fight around these areas before, very likely, on the next several weeks, some possible turn around. Okay, now if we take a look here in the scanner of the swings, you can see how powerful the pound dollar is. Everything is bullish. So basically, the plan that we had from the previous week, actually the last 2 weeks, does not change. We remain bullish, and buy retraces is still a smart place. Of course, with the bullish evidence. And what is the bullish evidence I refer to? You can see that, for example, like that, bullish hidden divergence, or on shorter time frames, some trendline breakouts, right? Things like that. False breaks on the lower time frames to the upside, things like that. Next pair we had on the list was the euro versus the pound, and our goal was sell the rallies. Now, ideally, we expected the two waves. In that case, it did not happen as the two waves. It was so strong trend that the move continued right after one leg. It's pretty rare, but it happens when the trend is very, very, very strong. Now, look what happens is for now. The structure still shows downtrend, right? So to understand where we are, let's take a look on the weekly. According to the weekly, we were dealing with triple cycle. Therefore, we expect double wave correction. There is no obstacle on the way that we currently start to create lower lows after these false breaks and the divergence. Nothing standing behind, and nothing looks like an obstacle. So from my point of view, the plan was and remains sell the rallies. Daily chart does not have any divergence against. The only thing we need to pay attention to is this very important supportive area and the fact that the Bollinger Band is already in duplicated area. Also, stop losses, early stop losses are located here. They are being cleaned. That's why I expect this area to be possible for a reversal zone. If we drop to the 4-hour chart, we would need to start to see reversal signs. The best reversal signs are fighting signs, fake breakouts. So if we do start to see here like a fake breakout, right? This is a sign that the bullish trend is slowing down. Now that might be also a trending fake breakout, right? So something like that, attempt to create new lows, and then alternative trend line, you connect the lows with the trend line, and it's faking breaking out, right? Breaking down and retracing upside. This is a very, very powerful sign for a retrace. And once we get it, it would be a good zone to start looking for possible buys. Also, take a look on the days 26, right? Very powerful day. And if it's not going to happen right now at the beginning of the week, it will very likely take us into the fighting zone, still pushing slower downward until the beginning of the next month. And then we have several critical days from the 1st to the 6th, right? So 1, 3, 5, 6 critical days coming. So there is a good chance if this week will remain bearish, by the end of this week and the beginning of the next week, you would see the euro pound start to create these false breaks I was talking about on the bottoms and start basically building up the retrace to the upside. And again, the best way to see that would be if you see the fight, and this fight should be with attempt to from the bullish side to show that the bears are giving up, and that happens with false breaks normally. Another alternative, of course, is if we just suddenly start to create a structure of higher highs and higher lows, then of course we can look to buy the retraces. So that's for the euro pound, and so far it's paying amazingly. I hope you guys enjoy it. Next one on the list is the dollar versus the yen. We were looking for our sell setups. This is the ideal area between 110 to 111. Right here. So we did not really reach the 111, but we are fighting the psychological 110. You can see and feel here the spikes having a lot of troubles with this 110 area. It's also movement from one band to the opposite band, massive psychological zone here. So the only problem is that the non-farm payrolls week is coming, and statistically yen pairs tend to be more bullish than bearish historically. It's not a mandatory rule, of course, but that's what statistically happens. So we already face false break here, right? We do want to see lower lows, and then we can basically go and start looking for the sells. There is a chance that the market will try still to fight here a bit before the next boom will happen. Our plan remains completely same. We are after sells, and also if we take a look here, we were right after very powerful days 2021 to look for possible reversal, breaking the trend line downwards, never happened yet, and breaking lower lows never happened yet. So we are paying attention to that closely. The last trend line which we draw here starts to be broken Friday. Now you do want to see it gains the renewed momentum by making the lower lows and joining the bigger trend downwards. And if you take a look here, we do want to see this and this turning bearish to provide us with a classical opportunity for a sell. And then you have the cycles and divergences fit in the swing highs and lows. Normally it is a sugar combination. Next one on the list we have is CAD franc. Our plan was basically possible sells from this massive area. That's what we were looking to do, and we got that going, right? We got the area and we got the move down. Now the move down came in two waves, and this is basically the corrective cycle we are looking at, right here. We basically got the corrective cycle. As I always say, corrective cycle could be in one of the two ways, and that's what we always discuss every single week. So it could be two waves like this, or it could be some range. Both are valid corrective cycles. In that case, we got the two waves, and now we are seeing that the pair is trying to continue higher. Let's take a look on the weekly chart. Weekly chart, last divergence is still bullish. The cycle is bullish as well. Sorry, here. Nothing against. Let's take a look on the daily. No stoppage, right? Therefore, there is a good chance we are about to continue higher. Several critical zones here. We have a stop losses area here, so there is a good chance we're going to try and climb towards. So I would say very simply that as long as we have this big structure of higher highs, higher lows, as long as that continues, there is a good chance we will be exposed to the upside until the next levels, also remembering this clearance area. So my plan was and remains bullish here, unchanged. AUD Kiwi, we wanted to see the drop down and start looking for the buy opportunities, right? This is the plan we wanted to see. So we got a drop, but this drop happened a bit deeper than we wanted, right? So we wanted to see here the slowdown, and currently it doesn't happen. We have a straight move, breaking through this level, not providing two waves yet, making it very, very, very suspicious. When it doesn't follow the technical plan I simply say, okay, the market is not ready for me. I would be putting that on a neutral, keep watching that, see how it develops. At this stage, there is nothing clear to trade here. Therefore, as for now, AUD Kiwi turns neutral. It does follow the plan that we wanted to see to the correction to the downside. It never provided yet a good structure to the upside. Ignore it. The next one on the list was AUD versus the dollar right here. And what we have here is basically exactly the plan. That's what we wanted to see. Bouncing from one of the supportive areas. We got a supportive area right here and the red line. Boom. Now we also had this as a statistical. Now I got my statistics from the Crystal Ball, as you know, the Forex Crystal Ball. It's one of the systems I personally use. I love the statistical indicator when it comes built in with cycles together, synchronized, rhyme to the same direction. Normally it's a sweet combination, and that's what we got in that case as well. We had our classical zone of the days here, and we said that's the place where we want to see the buys taking the control, right? This is the place. And that's so far exactly what follows up. What is expected from here? My view remains bullish. I do want to see this trend line like this being broken upside. I do want to see a new structure of higher highs, higher lows. It would be a very good sign for a possible rally as a continuation. So for me, Aussie dollar remains bullish, and as long as this low is respected, I would say this is an invalidation. I think we are going higher towards the 200 moving average and very likely towards the previous weekly high. So my plan was and remains bullish. For all those of you watching this video and are with me in this trading idea, in this trading opportunity, enjoy that, enjoy your ride. Make sure you don't lose in such setups, which means manage your trade correctly and accordingly to your trading rules to not to lose in a winning trade. Next one is the pound Kiwi. We have it for a very long-term bullish and the short-term bullish as well. So our plan was to get bounces upside. Let's take a look how it worked out for us. Pound Kiwi, right? So this was our plan, and we got it pushing upside. Now look what comes and happens here. Double wave on the daily chart, 200 moving average, right? And bearish divergence, tick down. This is a sign for a possible fight and reversal. We can see that we had one false break right here and one false break over the trend line, break up and retrace. We do not yet have any lower lows, not here, no structure yet. So there is a chance we would see that trying to climb, but expect a fight here. Every rally would be exposing us to a fight between the bulls and the bears that will show very likely their strength and power here. They will not give up on such opportunities to fight around the sequence of the things we have on the chart. False breaks, daily divergence and double cycle, classical zone. We are very close to psychological 195. The pressure begins to be bearish, and if we break this low, basically it's very likely to take us into corrective cycle. So it neither happens from here or slightly higher. We should be exposed on the coming period to possible retraces downwards short term, because for long term our plan does not change. We're still after the buys. Next one on the list would be basically the commodities and the indices. So before that, I would like to cover a new opportunity that I have on the list. This is the euro versus the Aussie, a pair I love right here. I'll try to make it very short and simple. According to the weekly cycle, we are here in a triple, right? Which are here. So we expect double wave correction or continuation play in a range. This or other way around, it remains bearish. According to the daily cycle, we had previous week an opposite divergence to the weekly. Now that means that we should expect a corrective cycle, which happened here, and now the pair is trying to break down and make lower lows. So in that place we have two situations to follow. First of all, this is a bend to bend movement, right, in the Bollinger Bands, and a pullback to the middle of the Bollinger Bands, spiking it, making it look like a very strong hold. So there is a good chance we are going to see the straight continuation downwards, making a double cycle. So far, so good. We have a beautiful area that it should achieve right here and then right here. Right? Now, the other possibility is that after bend to bend, many times the pair is making retrace to the opposite band and then continues its trend. This is a possibility, and therefore, if this high is broken, then we are after clearance of this place and deeper move down. So the euro Aussie should be expected to continue lower as long as we don't have the signs against, but if it breaks this high, we should be seeing it fighting this area and then continuing all the way lower. Okay, this is a new opportunity coming to us, which, well, I find pretty much attractive and interesting. Now I want to remind you, if there is any instrument that I don't cover, it's simply because I don't see that as a very interesting setup to follow as for the time I record the video. During the week things might change, right? The setups might go and develop, and that's why I always encourage my followers, come and join me in the live trading room. Because when you join the live trading room, you get the trading report and the list of the instruments day after day. Clearly explained to follow and to trade. So now we are back to the commodities. Our plan with the gold was get the retrace and look for the buys. So let's find our gold. Why it's not showing it here? Okay, so basically we got, let me go here. We wanted to see two waves or a range, right? Like a fake breakout of the range here, and to see that continuing upside. So basically, that's pretty much what we saw, right? We got the hold, we got the double bottom, bullish divergence, boom. So far, the plan follows pretty much greatly. And the way I see that, we are now into development of the next and final leg of the cycle. Ideally, we should be cleaning 1310 area or even higher. So my view for the gold was and remains bullish for the short term. probably for the long term, I do think that this area, whoa, sorry for the ugly drawing, would provide us some deeper short opportunities later, but too early to discuss about it. As for now, we remain bullish. Same we had with silver, that we wanted to see the visit right here, right, of the opposite Bollinger Band, bullish divergence to 4, 2 waves to complete, right? So we got a bullish hidden divergence, opposite band, and the 4-hour chart gave us the 2 waves as we wanted to see. Created a bullish divergence for us here, right? And we got the reversal. Now there is nothing against us, so the silver is expected to continue higher as well. The way I see that, that's what building up. No significant level here to pay attention to. So far, as long as there are no reversal signs like false breaks or slowdown with the next divergence, the pressure remains bullish. And the next one on the list would be our DAX. I remind you, for long term we are after sells, so that's what we want to see on the daily chart, right? 1, very likely 2, and then future sell. So this still remains the plan, which means on the short term we can still enjoy from buy opportunities like this with a bullish hidden divergence, or if it does create double cycle, then something like that before the future sells. So our plan currently does not change. Could we see some corrective cycles? Yes, because it builds up some cycle here, so that could be a slowdown, right? Something like that before the next rally and the next crash. Definitely could happen. We should be following this divergence. We should be following the daily bearish hidden divergence as well. That could start the corrective cycle a bit downward, but the main idea here is something like that, and then a crash. Sell the rallies is our plan for the long run, and it does not change. Okay, so that's all for this week. I hope you enjoyed it. I hope it helps you to trade during the week. If you enjoyed that, please show your support back, hit the like button, drop some feedback below the video. As I promised, I would remove my camera from the chart to the left, so I hope it's easier to follow. Sorry for the inconvenience it created in the previous week. And that's all. I invite you to join me in a live trading room. The link to join is right below in the description. Thank you very much for watching. I wish you a wonderful trading week, and I'll see you soon. Yours, Vladimir Ribakov, Traders Academy Club.